Men refusing to work are causing the economy to collapse. In the United States today, more than 6.8 million prime age men are neither working nor looking for work, and that single fact is sending shockwaves through the foundation of our entire society. When the providers step back, the entire structure begins to tremble, and what comes next is a slow motion unraveling that no amount of denial can stop. This is not a temporary dip or a seasonal fluctuation. It is a profound shift in how men are choosing to live their lives, and the consequences are already visible in empty factories, shrinking tax revenues, strained households, and a growing sense of unease that touches every corner of daily existence. Stay with this discussion all the way through because by the end, you will see exactly why governments are scrambling with new policies, why certain voices are suddenly calling for urgent action, and why the decisions being made right now will determine whether the coming years bring stability or a deeper collapse that affects everyone involved. For decades, society pushed a particular vision of progress that encouraged women to enter the workforce in large numbers under the banner of liberation and equality. What began as a cultural movement gained momentum through policy changes, educational shifts, and relentless messaging in media and institutions. The result was a steady rise in female labor force participation that eventually surpassed historical norms, while male participation followed a different path downward over the same period. Governments saw an opportunity to broaden the tax base by bringing millions more adults into paid employment, and the economy appeared to gain from the additional hours worked and income generated. Yet beneath the surface, this transformation carried consequences that were not fully anticipated at the time. Relationships between men and women grew more complicated as traditional expectations around provision and partnership collided with new realities of dual income households and shifting power dynamics. Women gained financial independence in many cases, but also shouldered new pressures that previous generations had distributed differently. Men faced a labor market that evolved rapidly with automation, globalization, and changing industry demands, reducing opportunities in sectors that once provided stable livelihoods for millions. Over time, these changes accumulated, creating a quiet but steady withdrawal by a growing number of men from full time formal employment. And observe how the numbers tell their own story across the decades. Prime age men between 25 and 54 once participated in the labor force at rates exceeding 95% in the middle of the last century. That figure has declined steadily and today hovers closer to 89%, with a notable portion of the drop concentrated among those without college degrees. When you account for men who have stopped searching altogether, the picture becomes even more striking, with estimates suggesting millions more are disengaged from traditional work structures. This is not laziness in the simplistic sense that some commentators suggest. It is a rational response to an environment where the rewards no longer match the effort required or the risks involved. Men have watched as certain industries contracted, while others favored different skill sets or demographics. They have seen wages stagnate in real terms for many roles, while the cost of housing, education, and basic necessities climbed higher. They have experienced a cultural narrative that sometimes celebrated independence for one group while questioning the value of traditional male contributions in the same breath. In response, a significant number have chosen paths that allow them to meet their own needs with less entanglement in systems that feel extractive or unrewarding. Consider the ways men have adapted once they step away from conventional 9 to 5 employment. Some turn to the gig economy, taking on flexible tasks through ride sharing delivery or short term contracts that let them control their hours without long term commitments. Others build small online ventures, leveraging skills in digital spaces where barriers to entry are lower and overhead is minimal. Real estate investments provide passive income for those who save diligently or time the market well, allowing them to live off rental yields rather than daily wages. Day trading in stocks or cryptocurrencies appeals to those with analytical minds and tolerance for volatility, though it carries its own uncertainties. Safety net programs, such as disability assistance or other support mechanisms, serve as supplements for some, though they rarely form the sole foundation for those determined to maintain autonomy. The common thread is a deliberate reduction in taxable formal income combined with a focus on self sufficiency that minimizes exposure to the demands of corporate hierarchies or government oversight. These choices reflect a search for peace and control in a world that often feels chaotic and one sided. Women have historically accounted for a large share of consumer spending in households, and much of that activity has been supported directly or indirectly by male earnings through relationships, marriage, or shared finances. When men reduce their participation in high earning formal work, the ripple effects move through retail, dining, entertainment, and service sectors that rely on discretionary purchases. Tax revenues also feel the pressure because men have traditionally shouldered a disproportionate share of the overall tax burden through income payroll and other levies. As taxable wages contract, governments face tighter budgets at the very moment when spending on social programs, entitlements, and infrastructure remains high or even grows. National debt levels have climbed into the tens of trillions, creating a situation where future obligations outpace realistic revenue projections under current trends. Inflation adds another layer of strain by eroding purchasing power and making everyday essentials more expensive for everyone, especially those relying on fixed or lower incomes. The result is a feedback loop where reduced economic activity from disengaged men contributes to slower growth, which in turn makes it harder for remaining workers and for the state to sustain previous levels of support. Society has responded to these developments with a mix of concerned proposals and attempts at persuasion. Discussions in policy circles have included ideas such as adjusting tax structures to encourage marriage and workforce participation, by offering breaks for certain family arrangements while increasing burdens on others. There have been conversations about reforming safety net programs to reduce perceived disincentives for work, though changes in this area often affect vulnerable populations broadly, including single women who may depend more heavily on such supports. Public figures from various backgrounds have appeared in media calling attention to what they describe as a masculinity crisis or a lack of purpose among younger men, urging a return to traditional roles of provision and responsibility. Yet, these messages frequently encounter resistance because they arrive after years of cultural signals that portrayed certain male traits as problematic or outdated. Men who have already stepped back hear the new appeals and weigh them against their current experiences of reduced stress, greater autonomy, and freedom from expectations that once felt burdensome. Many conclude that the peace they have found outweighs the uncertain benefits of re engaging on terms that still feel unbalanced. The historical parallel that comes to mind is the way large scale societal experiments unfold over generations. What begins with optimistic promises of empowerment and progress encounters the stubborn realities of human nature, incentives, and economic limits. Feminism and the push for women's workforce participation were presented as pathways to greater freedom and self determination. In practice, they expanded the pool of taxable labor and altered family structures in ways that redistributed responsibilities without always delivering the promised fulfillment. Women entered fields previously dominated by men and achieved notable successes, yet many still express dissatisfaction with the dual burden of career and home life, especially when suitable partners who can share the load are harder to find. Hypergamy. The tendency to seek partners of equal or higher status does not disappear simply because educational and earning patterns shift. When women outpace men in college completion and certain professional domains, the pool of men who meet traditional preference criteria shrinks, creating mismatches in dating and marriage markets. The outcome is not universal liberation, but a new set of challenges, including delayed family formation, lower birth rates, and increased loneliness across both genders. Immigration has been offered at times as a partial solution to labor shortages, but it introduces its own complexities. Native women often show limited interest in forming long term partnerships with recent arrivals from different cultural backgrounds, even when economic roles are filled. This leaves a labor force that may contribute to production, but struggles with social integration and family formation. Meanwhile, displaced Native men see fewer pathways into stable employment, further accelerating their withdrawal. Manufacturing and construction sectors that once absorbed large numbers of male workers have faced automation offshoring and regulatory pressures, reducing the availability of those roles. The transition to service oriented and knowledge based economies has favored different strengths and credentials, leaving many without clear routes forward. Young men, in particular, observe these patterns and make calculated decisions about how much effort to invest in systems that appear stacked against them. Video games, entertainment, and low cost leisure options provide immediate outlets that compete with the grind of low reward employment. The combination creates a cohort that is physically present but economically sidelined, with consequences that extend beyond individual households. Government debt approaching $40 trillion is not an abstract figure. It represents future claims on productivity that must be met through taxes, growth, or inflation. When a significant portion of the prime age male population reduces its contribution to taxable output, the arithmetic becomes unforgiving. Entitlement programs face sustainability questions as fewer workers support more beneficiaries. Infrastructure and defense spending compete for limited resources. Policymakers recognize the problem and explore levers such as tax incentives for marriage or penalties for prolonged inactivity. Yet implementation is difficult because men who have already minimized their formal income are less responsive to traditional tax signals. Attempts to tighten eligibility for assistance programs can create hardship for those who genuinely need support while failing to draw back those who have built alternative means of sustenance. The situation is compounded by cultural messaging that has spent decades questioning the value of male ambition and stoicism. When society labels certain behaviors as toxic, it should not be surprised when men internalize that critique and choose disengagement instead of striving under scrutiny. The bed that was made through these cultural shifts is now the one in which consequences must be confronted. Men who have walked away describe a sense of relief that comes from shedding layers of expectation. No longer chasing promotions that feel hollow or relationships that carry high risk with uncertain reward, they focus on personal interests, skill development, or simple contentment. Some live frugally and invest wisely, turning modest capital into sustainable income streams. Others combine part time work with community or family support, creating a patchwork that meets basic needs without full immersion in the rat race. This is not a monolithic movement, but a decentralized pattern of individual choices that add up to a macroeconomic shift. The economy misses the multiplier effects that come from high earning men spending on homes, vehicles, family activities, and services. Communities notice the absence of engaged fathers, coaches, and volunteers who once filled civic roles. Birth rates continue their decline as fewer men feel positioned to take on the responsibilities of parenthood. The quiet withdrawal is reshaping demographics in ways that will influence everything from school enrollments to social security projections for decades ahead. Women find themselves in a position where independence has delivered financial agency for many, but left gaps in partnership and security for others. High inflation has made solo living more challenging as rents, groceries, and utilities consume larger portions of income. The search for compatible partners becomes more difficult when potential matches have either lowered their ambitions or opted out of the dating market entirely. Some women respond by looking overseas for providers, though cultural and legal differences introduce new variables. Others double down on career advancement, hoping that professional success will compensate for personal shortfalls. The tension is evident in public discourse where calls for men to step up again mix with frustration over perceived entitlement or lack of accountability on all sides. Society as a whole is caught between celebrating past gains in gender equity and grappling with the practical outcomes of those changes. Productivity growth has slowed in ways that correlate with reduced male labor attachment, and the resulting drag affects wages, opportunities, and living standards broadly. The most hard hitting realization is that the current trajectory points toward deeper strain unless fundamental incentives realign. When men who once formed the backbone of production taxation and family provision step back, the load shifts onto remaining workers, the state, and whatever private arrangements can be sustained. Governments may attempt to bridge the gap through borrowing or monetary policy, but those tools have limits and carry their own inflationary or debt servicing costs. Cultural campaigns that shame or guilt men into returning often backfire because they ignore the lived experiences that led to the withdrawal in the first place. Men have heard the narrative of toxic masculinity for years, and many have decided that solitude offers more dignity than participation on those terms. They watch from the sidelines as institutions scramble, and they do so with a calm detachment born of having already adapted. The new Roman Empire analogy captures the scale of the transition where internal dynamics, rather than external invasion, drive the erosion of cohesion and capacity. This unfolding story is not one of villains and victims, but of actions, consequences, and human responses to changing conditions. Policies that expanded the workforce without fully accounting for relational and motivational realities have produced a generation of men who calculate that the game is not worth the candle. Women who traded traditional interdependence for state supported independence now face the limits of what the state can deliver when revenues falter. Society at large discovers that prosperity depends on broad participation and shared purpose rather than fragmented incentives. The coming years will test whether new approaches can restore balance or whether the drift continues until pressures force a more abrupt correction. Understanding the forces at play, the data behind the trends, and the lived realities on the ground is essential for anyone who wants to navigate this period with clarity rather than confusion. The choices made today by individuals and institutions will echo through families, economies, and communities for the rest of our lives. Continuing the narrative, the patterns visible in labor statistics deserve closer examination because they reveal more than headline numbers. Prime age male labor force participation has trended downward for over half a century, with accelerations during economic disruptions and slower recoveries afterward. The Great Recession left scars that never fully healed for many men in manufacturing and construction. The pandemic accelerated exits through health concerns, remote work shifts, and reevaluations of life priorities. Even as headline unemployment rates recovered, the broader measure of inactivity told a different story. Millions of men aged 25 to 54 sit outside the official labor force, and the reasons span economic, cultural, and personal dimensions. Some cite health issues, both physical and mental, that make consistent employment difficult. Others point to skill mismatches where their experience no longer aligns with available openings. A growing subset simply sees insufficient upside in trading time for marginal financial gains after accounting for taxes, commuting, and stress. The underground economy, estimated in the trillions, provides cash based opportunities that avoid formal reporting and allow flexibility that traditional jobs rarely match. Family support networks absorb some of the slack, particularly when multiple generations share housing. Technology has lowered the cost of entertainment and information, making modest living standards feel more tolerable than in previous eras when idleness carried higher social stigma. Education trends add another layer to the picture. Young women now outnumber young men in college the enrollment and completion rates, creating a credential gap that influences earning potential and social matching. Men without degrees face steeper challenges in a labor market that increasingly screens for formal qualifications, even in roles that historically relied on apprenticeships or on the job training. Vocational pathways have received less emphasis in policy and culture, leading to a situation where capable hands lack structured routes into stable trades. Meanwhile, service sector growth has favored fields where women predominate, such as healthcare, education, and administrative roles. The result is a divergence in economic trajectories that reinforces the withdrawal dynamic. Hey guys, in a world pushing you to own nothing and be happy, crypto is your key to survival. Join Angry's Crypto Academy to master buying, selling, and trading crypto. Make huge profits and safeguard your wealth. Plus, discover the one crypto virtually no one is talking about, poised to create new millionaires in the upcoming bull run. The link is in the description of the video below. Go check it out now. Men who do enter the workforce often encounter environments shaped by diversity initiatives that can feel exclusionary or quota driven, further eroding motivation. Stories circulate of qualified candidates passed over for less experienced hires to meet demographic targets. And while individual cases vary, the perception alone influences decisions about whether to compete at all. Dating and marriage markets reflect these economic shifts in tangible ways. Women continue to express preferences for partners who demonstrate ambition, stability, and the ability to contribute at a comparable or higher level. When fewer men meet those thresholds due to reduced workforce attachment, the pool of viable options shrinks. Dating apps amplify selectivity by presenting endless choices that encourage holding out for ideal matches rather than compromising. Marriage rates have declined steadily. And age at first, marriage has risen, contributing to lower fertility and smaller family sizes. Children raised in single parent or non traditional households face their own statistical challenges in education, emotional development, and future earnings. The cycle becomes self reinforcing as boys grow up with less exposure to engaged male role models and internalize different expectations about work and responsibility. Communities with high rates of male disengagement show corresponding increases in social isolation, substance issues, and reduced civic participation. Churches, volunteer organizations, and local sports leagues notice the absence of men who once formed a reliable base of support and leadership. The fiscal implications extend far beyond annual budget debates. Social Security and Medicare rely on a worker to beneficiary ratio that becomes strained when prime age adults contribute less. State and local governments depend on income and sales taxes that shrink when consumer spending contracts. Infrastructure projects face funding shortfalls at the same time as maintenance backlogs grow. Defense and public safety require personnel and resources that compete with entitlement demands. Each percentage point drop in male labor participation translates into billions in lost output and revenue over time. Economists have modeled scenarios where restoring even modest increases in participation could add millions of workers, boost gross domestic product, and ease pressure on public finances. Yet, achieving that restoration requires addressing root causes rather than symptoms. Simply cutting benefits without creating meaningful opportunities risk hardship without reversing the trend. Expanding education and training must be paired with cultural signals that value the contributions being trained for. Tax policy can nudge behavior, but cannot manufacture purpose or motivation where it has eroded. Public commentary on the issue often splits into camps that either blame men for lacking drive or blame society for failing to provide adequate support. Both perspectives contain partial truths but miss the integrated nature of the problem. Men respond to incentives and narratives just as everyone does. When the narrative emphasizes independence for women while simultaneously questioning male value, the predictable outcome is reduced investment from men in collective structures. When incentives favor flexibility over commitment or leisure over labor, the rational actor adjusts accordingly. The challenge for leaders is to craft messages and policies that acknowledge past missteps without descending into recrimination. Celebrating the dignity of work in all its forms, from trades to professions to entrepreneurship, can help rebuild a sense of shared enterprise. Highlighting successful men who provide for families, build businesses, and contribute to communities offers positive examples that counter narratives of toxicity. At the same time, honest conversations about the pressures women face in balancing career and family can foster empathy rather than division. The goal is not to turn back the clock, but to evolve toward arrangements that deliver sustainable well being for both genders and for the next generation. As the discussion deepens, it becomes clear that this phenomenon touches fundamental questions about what constitutes a flourishing society. Human beings thrive when they have purpose, connection, and the opportunity to contribute according to their abilities. When large numbers of one half of the population disengage from those elements, the whole suffers. Productivity slows, innovation lags, and social cohesion frays. Children grow up in environments that shape their expectations in ways that may perpetuate the cycle. Economies that fail to harness the energy and ambition of their young men risk falling behind competitors who maintain higher participation rates. History shows examples: civilizations that experience demographic or motivational declines, and the adjustments required were rarely painless. The current situation in the United States and similar trends in other developed nations present a chance to learn from those patterns before they harden into irreversible outcomes. Policymakers, researchers, and cultural influencers all have roles to play in diagnosing the causes and testing potential remedies. Individuals, meanwhile, continue making daily choices that aggregate into the larger picture, whether that means doubling down on self reliance or reconsidering the value of our re engagement on new terms. The intensity of the situation stems from its quiet nature. There are no dramatic explosions or sudden crises that force immediate attention. Instead, the changes unfold gradually through statistics that rarely make front page headlines and personal decisions that rarely generate viral outrage. Yet the cumulative effect is a society that is learning to function with millions fewer active contributors than it once had. Women who once anticipated shared provision now navigate higher costs and heavier loads. Governments that expanded commitments based on broader tax bases now confront revenue gaps. Men who have found equilibrium in withdrawal weigh the costs and benefits of returning to a system that feels altered. The coming period will reveal whether adaptive innovations, new cultural narratives, or policy experiments can realign incentives sufficiently to stabilize the trajectory. What remains certain is that ignoring the underlying dynamics will only allow the pressures to build further. Understanding the full scope of how men stepping back influences everything from household budgets to national solvency is the first step toward addressing it with the seriousness it deserves. This brings us to the broader economic architecture and how it interacts with human behavior. Consumer spending drives roughly 70% of gross domestic product in the United States, and women have long influenced the majority of purchasing decisions within households. When male earnings decline or become less reliable, the flow of discretionary dollars contracts even if female earnings rise to offset some of the gap. Retail sectors, from apparel to home goods to dining, experience the difference. Automotive sales, housing transactions, and travel bookings all feel the pinch when fewer men occupy high earning positions or feel motivated to invest in status symbols associated with provision. The gig economy and online marketplaces have absorbed some activity, but they often operate at lower margins and with less multiplier impact than traditional employment chains. Tax collections follow similar patterns, with income taxes, payroll taxes, and corporate revenues all sensitive to workforce attachment. When taxable income pools shrink, deficits widen unless spending is curtailed, which brings its own political and social challenges. The federal debt trajectory already projects interest payments consuming larger shares of the budget, leaving less room for discretionary priorities or unexpected shocks. Inflation compounds these difficulties by acting as a hidden tax that erodes savings and purchasing power. Men living on reduced formal incomes or alternative streams may be better positioned to weather price increases if their lifestyles are already minimalist. Women balancing rent, utilities, and other fixed costs on single incomes often feel the squeeze more acutely, especially in high cost urban areas. The resulting pressure contributes to political demands for relief measures that further strain public finances. Central banks face difficult trade offs between controlling inflation and supporting growth when labor supply constraints exist alongside weak participation. The entire system is interdependent in ways that make isolated fixes difficult. Reforming education to better align with labor market needs, investing in vocational training, and reducing regulatory barriers to entry in trades could expand opportunities. Cultural efforts to restore respect for practical skills and male contributions could shift perceptions among young men considering their futures. Yet each of these steps requires sustained commitment across institutions that have grown accustomed to different priorities. The human element remains central throughout. Men who have disengaged often describe a journey that began with frustration over unfair treatment in family courts, workplaces, or social expectations. False accusations, career setbacks, or financial ruin following divorce have left scars that make trust in institutions fragile. Others cite the simple math of effort versus reward, where long hours yield modest net gains after taxes and living expenses. The appeal of video games, streaming content, and hobbies that provide immediate feedback and achievement without external judgment competes effectively with unrewarding jobs. Mental health challenges, including depression, anxiety, and the lingering effects of the opioid crisis, play roles for subsets of the population. Addressing these requires more than economic policy. It calls for honest dialogue about meaning, resilience, and the value of struggle. Societies that succeed in giving young men a compelling vision of their role as builders, protectors, and providers tend to maintain higher participation and cohesion. Those that undermine that vision through mixed messaging or institutional bias risk the very disengagement we observe today. Women navigate their side of the equation with parallel complexities. Many have achieved professional success and financial autonomy that previous generations could scarcely imagine. Yet surveys consistently show elevated levels of unhappiness and loneliness despite material gains. The search for partnership remains challenging when potential mates are either unavailable or unwilling to commit under current conditions. Biological clocks add urgency for those desiring children, while career demands create trade offs in timing. Some respond by embracing single motherhood or alternative family structures, though data indicate those paths carry statistical disadvantages for child outcomes. Others advocate for policy changes that would make balancing work and family more feasible, such as expanded leave or affordable childcare. The tension between independence and interdependence is not easily resolved, and public discourse often polarizes rather than bridges the gap. Genuine progress would involve acknowledging that both men and women benefit from arrangements that allow mutual support without coercion or unrealistic expectations. Looking ahead, the next decade will likely bring continued experimentation as societies test different approaches to the participation challenge. Some regions may emphasize cultural renewal through education and media that highlight positive male role models and the dignity of contribution. Others may lean on technological solutions such as automation or artificial intelligence to offset labor shortages, though these tools create their own displacement effects and do not address the underlying motivational questions. Immigration policies will be debated as potential fillers for workforce gaps. But integration success depends on more than economic roles. It requires social acceptance and shared values that are not guaranteed. Tax and benefit reforms will be proposed with varying degrees of political support and implementation success. Throughout these efforts, the quiet choices of millions of men will continue to shape outcomes more powerfully than top down directives. When individuals conclude that solitude or minimal engagement offers a better quality of life than the alternatives, the aggregate impact forces adaptation at higher levels. The intensity of the current moment stems from the recognition that time is not unlimited. Demographic trends, including aging populations and low birth rates, amplify the importance of maximizing productivity among those in their working years. Every prime age man who remains on the sidelines represents lost potential in innovation, craftsmanship, leadership, and family formation. The cost is measured not only in dollars, but in the texture of daily life, the strength of communities, and the prospects for future generations. Men who have found peace in their withdrawal have earned a measure of respect for adapting creatively to difficult circumstances. At the same time, the broader society has a stake in encouraging re engagement on terms that feel fair and rewarding. The path forward lies in honest assessment of what went wrong in the social experiment of recent decades, followed by pragmatic steps to restore balance. This includes reforming family law to reduce perverse incentives, reforming education to serve all students effectively, and cultivating a culture that values competence, contribution, and character across genders. As the narrative unfolds further, layers emerge around the psychological and philosophical dimensions of work and worth. Human beings are wired for purpose, and when work no longer provides, it alternative sources must be found or created. For some men, video games offer structured challenges and measurable progress that real world jobs no longer deliver. For others, hobbies, side projects, or intellectual pursuits fill the void. The danger lies in lifestyles that become too isolated, diminishing the social bonds that sustain mental health and civic life. Communities thrive when men and women participate together in shared endeavors, whether through employment, family, or voluntary associations. When one group steps back, the fabric weakens, in subtle but cumulative ways. Restoring that fabric requires more than jobs, it requires a renewed sense of mutual respect and common destiny. Policymakers who focus solely on economic metrics miss the deeper human needs at stake. Cultural leaders who prioritize division over unity exacerbate the very problems they claim to solve. The story of men stepping back is ultimately a story about incentives, feedback loops, and the limits of social engineering. What began as well intentioned efforts to expand opportunities evolved into a system that inadvertently discouraged participation from a key demographic. The correction will not happen overnight, and it will require humility on all sides to examine assumptions and adjust course. Data from labor statistics surveys and economic studies provide the map, but human choices will determine the destination. Men who have walked away have demonstrated resilience and creativity in forging new paths. Women who face new pressures are showing similar adaptability in navigating changed realities. Society as a whole now confronts the task of integrating these shifts into a sustainable framework that supports prosperity, security, and fulfillment for the greatest number. The coming chapters will be written by how effectively we learn from the current one. The manufacturing sector once served as a reliable pathway for men without advanced degrees to secure steady income and build careers through hands on skills and overtime opportunities, yet decades of offshoring and automation have hollowed out that foundation, leaving entire regions with diminished prospects and communities that once thrived around factories now grappling with empty industrial parks and reduced local spending. In places like the Midwest and parts of the South, where assembly lines and production facilities defined economic life, generations of workers watched as jobs migrated overseas in search of lower costs, while domestic plants adopted machines that required fewer operators and more technicians with specialized training that many did not possess. This contraction did not happen overnight, but through incremental decisions by corporations responding to global competition and policy environments that sometimes favored imports over domestic production. Men who entered the workforce expecting to follow in the footsteps of their fathers or uncles found instead a landscape where entry level positions paid less in real terms and offered limited advancement without additional credentials that required time and money many could not readily afford. The loss of these roles removed not only wages, but also the structure and social connections that came with shift work team environments and union protections that provided a sense of belonging and collective bargaining power. As those opportunities faded, men turned inward, evaluating whether the remaining service oriented positions in retail logistics or hospitality justified the physical demands, irregular hours, and customer facing stresses when the net financial gain after commuting taxes and basic living expenses felt marginal at best. Construction, which historically absorbed large numbers of male laborers, has faced its own set of headwinds from fluctuating housing cycles, material cost spikes, and regulatory requirements that extend project timelines and increase overhead for smaller contractors. While infrastructure initiatives occasionally inject temporary funding, the overall trend shows inconsistency that discourages long term commitment from workers who prefer stability over boom and bust cycles. Men skilled in trades such as welding, plumbing, or electrical work often discover that independent contracting offers more control, but also carries risks of inconsistent cash flow, client disputes, and the burden of self managed benefits like health insurance and retirement savings. For those without established networks or capital to start their own ventures, the appeal diminishes, especially when alternative low overhead activities provide comparable or better daily satisfaction without the liability exposure. The service economy that has grown to fill some of the void tends to concentrate in areas like healthcare administration and education where female participation dominates, and hiring practices sometimes reflect preferences for certain demographic balances that sideline male applicants even when qualifications align. This sectoral shift contributes to the broader sense that the labor market no longer values the physical and technical aptitudes that many men naturally develop, and instead rewards credentials and interpersonal styles that align more closely with environments shaped by different priorities. Immigration patterns add another dimension to the labor market dynamics as inflows of workers from abroad fill roles in agriculture, hospitality, and certain manufacturing niches, often at wage levels that make it challenging for native born men to compete without undercutting their own living standards. Employers sometimes cite labor shortages in these fields, yet data on application volumes and unfilled postings suggest that the issue frequently revolves around compensation and working conditions rather than an absolute lack of interested candidates. When visa programs prioritize high skilled technical roles in technology and engineering, they can displace domestic workers who have invested years in those domains, only to see positions go to lower cost international talent despite requirements intended to protect local hiring. The result is frustration among men who perceive the system as favoring outsiders, while domestic policy simultaneously expands social supports that reduce the urgency to accept available positions. Women in the workforce have increased their presence across many industries, but their preferences in partner selection often remain oriented towards men who demonstrate higher earning capacity or status, creating a mismatch when educational attainment and income trajectories diverge. In European contexts, similar experiments with large scale refugee integration revealed limited cross cultural pairing despite policy efforts to promote assimilation, highlighting how deeply rooted preferences for cultural compatibility and provider potential persist even amid demographic pressures. Educational institutions have played a significant role in shaping these outcomes by expanding access and encouraging higher enrollment among women, while male completion rates lagged, leading to a credential imbalance that influences hiring screens and long term earning projections. Colleges and universities became environments where support services and campus cultures sometimes emphasized certain narratives around gender that left many young men feeling marginalized or uncertain about their place, prompting some to forego higher education altogether in favor of immediate workforce entry or alternative skill development. Vocational and trade schools, which could have served as bridges for practical minded individuals, received comparatively less funding and promotion in public discourse, allowing a perception to take hold that only degree holders deserved respect or advancement opportunities. This divergence compounds over time as women secure positions in growing professional fields, while men without equivalent paperwork face barriers even in roles where experience and aptitude would suffice under different evaluation standards. The financial burden of student debt further discourages participation for those who question the return on investment when entry level salaries in many fields fail to outpace inflation or housing costs in major metropolitan areas. Family law and court systems have introduced additional calculations for men contemplating commitment or re engagement with societal structures because outcomes in divorce or custody proceedings often impose long term financial obligations that feel disproportionate to the relational investment, especially when earning potential is already under pressure. Men who have witnessed friends or family members navigate alimony, child support, and asset division emerge with heightened caution about legal entanglements that could jeopardize their financial autonomy for years or decades. This awareness influences decisions around cohabitation, marriage, and parenthood as the perceived risks outweigh the rewards, in environments where shared responsibilities no longer follow predictable patterns. The state has assumed greater roles in supporting single parent households through various assistance mechanisms, yet those programs face sustainability questions when contributor numbers decline and caseloads expand. Attempts to adjust eligibility or benefit levels encounter resistance because they intersect with genuine needs among populations that rely on them for basic stability, creating political tensions that delay meaningful reforms. In the underground economy, men have discovered avenues for generating income that bypass traditional reporting requirements and tax withholdings, allowing them to maintain modest lifestyles through cash transactions, informal services, or small scale enterprises that operate beneath formal oversight. Estimates place the scale of such activity in the trillions nationally, encompassing everything from unreported handyman work to resale operations and localized barter networks that provide flexibility without the administrative burdens of licensing, payroll, or compliance filings. These arrangements appeal to individuals who prioritize control over their schedules and direct retention of earnings over the security of employer sponsored benefits that often feel illusory when job security proves temporary. Technology has facilitated some of these adaptations through peer to peer platforms and digital payment methods that enable discrete exchanges, while cryptocurrencies offer additional layers of separation from centralized financial systems for those inclined toward such tools. The lifestyle that emerges emphasizes frugality, resourcefulness, and selective engagement with consumer culture, avoiding the debt traps associated with status driven purchases like new vehicles or luxury goods that once signaled success in traditional career paths. Psychologically, the withdrawal reflects a recalibration of what constitutes a worthwhile expenditure of time and energy when external validation through work titles or material accumulation no longer delivers the expected sense of accomplishment or security. Men who once derived identity from being reliable providers and protectors now weigh that role against the realities of uncertain partnerships, fluctuating economic conditions, and cultural signals that sometimes portray traditional strengths as liabilities rather than assets. The availability of low cost, high engagement entertainment options, such as interactive digital media, provides immediate dopamine responses and achievement loops that compete directly with the delayed gratification of career ladders or family responsibilities. Isolation can deepen when social circles shrink due to reduced workplace interactions or community involvement, yet for many, the trade off feels preferable to environments perceived as hostile or unrewarding. Mental health indicators show correlations with prolonged disengagement, including elevated risks of substance use and mood disorders, though causation runs in multiple directions as economic pressures and lack of purpose feed into each other, creating self reinforcing cycles that prove difficult to interrupt without addressing underlying incentive structures. International comparisons illuminate the uniqueness and universality of these trends as other developed nations grapple with similar declines in male labor attachment amid aging populations and shifting cultural norms. In parts of Europe, where generous social welfare systems provide safety nets, the participation drop manifests through extended periods of unemployment or reliance on disability classifications that stretch definitions of incapacity to accommodate lifestyle preferences. Asian economies, with strong cultural emphasis on work ethic and family provision, show different patterns. Yet, even there, younger generations question the intense corporate demands when work life balance narratives gain traction through global media. Developing regions experiencing rapid urbanization and industrial growth sometimes absorb male labor more readily, but face their own challenges with skill mismatches and informal sector dominance. The common thread across contexts is the tension between individual incentives for autonomy and collective needs for productive contribution to sustain public goods and intergenerational transfers. Nations that maintain higher male participation rates tend to preserve clearer pathways for skill development, cultural affirmation of practical contributions, and policy environments that reward effort without excessive extraction through taxation or regulation. The feedback loop within society intensifies as reduced male workforce involvement leads to slower economic expansion, which in turn limits wage growth and opportunity creation, further discouraging participation in a cycle that gains momentum over years. Birth rates fall when fewer men feel positioned to support families, contributing to demographic imbalances that strain pension systems and healthcare infrastructure designed around assumptions of steady population replacement. Communities experience the absence of engaged male figures in mentoring, coaching, and volunteer capacities, leading to subtle erosions in social capital that affect youth development and neighborhood cohesion. Schools notice shifts in male student motivation and behavioral patterns when role models of consistent contribution become less visible in daily life. The expansion of state responsibilities to compensate for these gaps increases fiscal pressures at precisely the moment when revenue bases narrow, creating dilemmas for policymakers who must balance short term relief with long term solvency concerns. Public discourse sometimes frames the issue in terms of personal failings or systemic biases, yet a more integrated view recognizes the interplay of economic signals, cultural narratives, and institutional designs that shape behavior at scale. Technological advancement continues to reshape the landscape in ways that both enable disengagement and offer potential reconnection points through remote work opportunities, skill based platforms, and entrepreneurial tools that lower barriers for independent ventures. Artificial intelligence and automation promise productivity gains that could offset labor shortages, but they also risk displacing remaining routine positions, accelerating the need for adaptive strategies among workers at all skill levels. Men who master digital tools for content creation, freelance services, or e commerce can carve out niches that align with their interests and risk tolerances, avoiding the hierarchical structures of traditional employment. However, these paths require self discipline, marketing abilities, and tolerance for income volatility that not everyone possesses equally, leading to varied outcomes within the broader trend. Education systems that incorporate more practical training apprenticeships and lifelong learning modules could better prepare younger cohorts for this evolving reality. Yet implementation lags behind the pace of change, leaving transitional generations to navigate uncertainty with limited guidance. The cultural conversation around masculinity and purpose has evolved in directions that sometimes emphasize critique over construction, leaving many men to seek validation in private spheres rather than public arenas where their contributions once received recognition. Narratives that highlight vulnerabilities without pairing them with pathways for strength and agency can inadvertently reinforce withdrawal by framing traditional outlets for male energy as problematic rather than essential to societal function. Restoring balance involves acknowledging the validity of concerns around equity and inclusion while reaffirming the value of competence, reliability, and protective instincts that have historically supported family and community stability. Positive examples of men building businesses, leading initiatives, and supporting loved ones through consistent effort provide counterpoints to dominant stories of disconnection, though they receive less amplification in mainstream channels. The quiet determination of those who adapt creatively to constraints deserves recognition as a form of resilience rather than resignation, because it demonstrates human capacity to recalibrate when external conditions shift dramatically. Economic modeling of the participation gap reveals substantial opportunity costs measured in foregone output, potential tax revenue, and multiplier effects from household spending that would otherwise circulate through local economies. Each additional million prime age men re-entering formal work could generate cascading benefits across suppliers, retailers, and service providers, while easing burdens on public budgets strained by entitlement commitments. Yet achieving such shifts requires more than exhortation or marginal policy tweaks, because the underlying calculations that led to disengagement run deep into perceptions of fairness, reward structures, and life satisfaction metrics. Experiments with universal basic income proposals or expanded safety nets risk exacerbating the trend by further decoupling income from productive contribution, though proponents argue they could free resources for creative pursuits with eventual societal payoffs. The evidence from pilot programs remains mixed, with some participants increasing voluntary activity while others settle into patterns of minimal engagement that mirror existing dropout dynamics. Sustainable solutions likely involve combinations of wage enhancements in essential sectors, regulatory relief for small businesses, cultural reframing of work dignity, and targeted interventions that address specific barriers like credential inflation or legal disincentives. Health and longevity patterns intersect with these developments, as men outside structured work environments sometimes experience different trajectories in physical activity, nutrition, and healthcare utilization compared to their employed counterparts. The absence of workplace wellness programs or employer sponsored insurance can lead to delayed preventive care, while increased leisure time offers opportunities for exercise or hobbies that promote well being when channeled effectively. Substance use issues that fill voids left by purpose deficits represent a tragic cost that compounds individual suffering and societal expenses through treatment and lost potential. Addressing these intersections calls for holistic approaches that consider mental, emotional, and physical dimensions rather than isolating economic participation as the sole variable. Community based initiatives that foster skill sharing, mentorship, and collaborative projects could rebuild social connections without relying solely on formal employment as the organizing principle, though scaling such efforts requires overcoming fragmentation and resource constraints common in decentralized settings. The global supply chain vulnerabilities exposed in recent years underscore the risks of over reliance on external labor and production capacity when domestic workforce attachment weakens. Strategic industries, from energy to defense to critical materials, benefit from robust native participation that ensures continuity and innovation under varying geopolitical conditions. When prime age men reduce their involvement, the resilience of these sectors depends more heavily on remaining workers or imported talent, introducing dependencies that carry security and reliability questions. Policy frameworks that incentivize reshoring and skill development in key areas could create meaningful pathways that align individual interests with national priorities. Yet execution demands coordination across government, private sector, and educational institutions that have grown accustomed to divergent goals. Men who possess technical aptitudes and practical problem solving skills represent an underutilized resource in this context, capable of contributing to advancements in manufacturing, renewable energy infrastructure, and advanced trades if the environment makes participation attractive once again. As demographic projections indicate continued aging and lower fertility, the importance of maximizing productivity and contribution from current working age cohorts grows more acute with each passing year. Societies that successfully reverse disengagement trends through thoughtful reforms tend to enjoy advantages in innovation, adaptability, and fiscal health compared to those that allow the pattern to persist unchecked. The human element remains paramount because behind aggregate statistics lie individual stories of adaptation, calculation, and search for meaning in changing times. Men who have chosen paths of reduced formal involvement have often done so after weighing tangible experiences against promised benefits, demonstrating rational agency rather than blanket rejection of responsibility. Encouraging re engagement or new forms of contribution requires environments that respect that agency while offering compelling reasons to invest effort once more. This includes transparent policymaking that avoids punitive measures in favor of positive incentives, cultural messaging that balances critique with appreciation, and economic conditions that deliver tangible returns on labor invested. The interplay between technology, culture, and economics creates a complex adaptive system where small changes in one area ripple through others in unpredictable ways. Platforms that connect skilled individuals with project based opportunities lower the threshold for participation without requiring full time commitments, allowing men to test waters or maintain involvement on their terms. Cultural products that portray diverse models of success, including those built on self reliance, craftsmanship, and quiet competence, can shift aspirations among younger generations still forming their worldviews. Economic policies that reduce barriers to entry for entrepreneurship, such as streamlined licensing or tax treatments for small scale activity, can unlock potential that remains latent under current structures. The challenge lies in implementing these elements coherently without unintended consequences that undermine the very goals of stability and broad based prosperity. Observers who track these developments closely recognize that the coming decade will test the capacity of institutions and individuals alike to navigate the transition toward arrangements that better align incentives with human nature and societal needs. Continuing the examination, the role of housing markets deserves attention because affordability crises in many urban and suburban areas make independent living or family formation more challenging for men with moderate or variable incomes. When home prices and rents consume large portions of earnings, the calculus for accepting employment shifts as the marginal benefit of additional work fails to cover the threshold costs of establishing separate households. Shared living arrangements with family or roommates become pragmatic choices that further reduce the urgency to maximize taxable income while providing social buffers against isolation. Men who invest in real estate on smaller scales, such as purchasing multi unit properties or engaging in short term rentals, can generate income streams that support minimalist lifestyles without daily workforce immersion. This strategy requires initial capital and management effort, but rewards patience and market timing in ways that traditional wage labor sometimes does not. The broader housing supply constraints stemming from zoning regulations, construction costs, and labor shortages in building trades create a self limiting dynamic where reduced male participation in those fields exacerbates scarcity and price pressures affecting everyone. Retail and consumer sectors feel the downstream effects as discretionary spending patterns adjust to lower overall household formation and reduced male driven purchases in categories like electronics, vehicles, and dining out. Businesses that once relied on steady demand from young professionals or family units adapt by targeting different demographics or streamlining operations. Yet the aggregate contraction contributes to slower growth narratives that influence investment and hiring decisions across the economy. Entertainment and leisure industries experience mixed impacts, with some segments benefiting from increased free time, among disengaged men, while others suffer from diminished group activities or date related expenditures. The gig platforms that facilitate flexible work often concentrate in urban areas where competition keeps compensation modest and benefits non existent, pushing participants toward volume over sustainability. Men who combine multiple gig streams with careful expense management can achieve equilibrium that feels preferable to single employer dependence, though burnout risks remain when physical demands accumulate without structured recovery periods. The legal and regulatory environment surrounding small business formation and operation influences the feasibility of independent paths by imposing compliance costs that disproportionately affect microenterprises run by individuals without administrative support. Licensing requirements, insurance mandates, and tax filing complexities create friction that discourages formalization, even when underlying activity could scale under simpler rules. Men who opt for cash based or informal models navigate these barriers by staying below thresholds that trigger oversight. Yet, this approach limits growth potential and exposes them to enforcement risks if visibility increases. Reforming these structures to favor genuine entrepreneurship without compromising essential protections could unlock additional economic activity and provide outlets for creative energy that currently finds expression in less productive channels. Educational curricula that incorporate practical business skills, financial literacy, and regulatory navigation from early stages would better equip young men to pursue such avenues confidently rather than defaulting to disengagement when traditional routes appear blocked. Social trust and institutional confidence play subtle but powerful roles in participation decisions because men who perceive systems as biased or extractive invest less in collective endeavors, including formal employment that funds public services. Decades of policy experiments and cultural shifts have left residues of skepticism that manifest as calculated minimalism rather than outright rebellion. Rebuilding that trust requires consistent demonstration of fairness, competence, and reciprocity across government, corporate, and social domains where actions align more closely with stated principles. When men observe outcomes that reward connection over contribution or penalize self reliance, the motivation to engage diminishes proportionally. Conversely, environments that celebrate achievement, protect property rights, and maintain predictable rules encourage broader investment of time and talent because the expected returns feel attainable and secure. The slow erosion of these elements has contributed to the current equilibrium, and their deliberate reinforcement could gradually shift the balance toward higher involvement without coercive measures that provoke further resistance. International migration of talent and capital responds to these domestic conditions as skilled individuals and businesses seek jurisdictions with more favorable incentive structures or cultural climates for male achievement. While brain drain concerns arise in some contexts, the movement also highlights competitive dynamics where nations vie for productive populations through policy and messaging. The United States retains advantages in innovation ecosystems and market size, yet sustaining them depends on nurturing the human capital base that drives those strengths, including the cohort of men whose current disengagement represents untapped potential. Strategies that combine targeted recruitment with internal reforms to retain and motivate native talent offer a balanced approach, though political divisions often complicate implementation. Long term demographic health requires attention to family formation rates, which in turn depend on economic security and relational stability that feel elusive when workforce attachment weakens. The philosophical questions underlying these trends touch on fundamental aspects of human flourishing, including the balance between autonomy and interdependence, the meaning derived from contribution, and the responsibilities individuals owe to the societies that enable their existence. Men who prioritize solitude and self management embody one resolution to these tensions, choosing personal peace over uncertain collective benefits. Society, in responding, must avoid simplistic judgments that label such choices as pathology or heroism, and instead engage with the substantive reasons that make them rational for many. Crafting narratives that integrate individual agency with mutual benefit create space for voluntary re engagement on terms that respect evolved preferences and modern realities. This evolutionary process mirrors historical adaptations where civilizations adjusted to technological or demographic shifts by realigning values and institutions around enduring human motivations rather than attempting to override them through force or denial. As the analysis broadens, the interconnections between energy policy infrastructure development and workforce capacity become evident because large scale projects in these areas require skilled labor pools that draw heavily from male dominated trades and engineering fields. When participation declines, project delays, cost overruns, and reliance on external contractors increase, exposing vulnerabilities in critical systems from power grids to transportation networks. Investments in training pipelines that emphasize apprenticeships, mentorship, and competency based progression could rebuild those capacities while providing clear pathways for men seeking purposeful work without lengthy detours through unrelated academics. Public private partnerships that align funding with measurable skill outcomes and employment placements offer mechanisms to accelerate progress, though success depends on overcoming bureaucratic hurdles and ensuring that compensation reflects the demands and risks involved. Men who excel in these domains often derive satisfaction from tangible results, visible infrastructure improvements, and the knowledge that their efforts support broader societal functions, providing intrinsic rewards that abstract office roles sometimes lack. The creative and knowledge sectors, while expanding in overall employment share, have not fully compensated for losses in goods producing industries because they favor different cognitive and social profiles that do not map evenly across gender or educational distributions. Men with spatial, mechanical, or systems thinking strengths may find fulfillment in design, fabrication, or problem solving roles, yet entry often requires portfolios or networks that prove elusive without initial footholds. Remote and freelance opportunities in these areas have grown through digital platforms, yet competition remains fierce, and income polarization leaves many with supplemental rather than primary earnings. Cultivating subcultures that value hybrid skills, combining technical expertise with entrepreneurial application, could expand viable niches where men contribute meaningfully while maintaining autonomy. Examples from maker movements, open source projects, and specialized consulting demonstrate the potential, though scaling requires cultural shifts that recognize these contributions as legitimate and valuable rather than peripheral. Ultimately, the trajectory depends on the cumulative choices of millions navigating personal circumstances against larger forces with no single lever capable of reversing entrenched patterns overnight. Incremental improvements in economic conditions, cultural tone, and institutional responsiveness can compound over time, restoring momentum through demonstrated results rather than declarations. Men who have walked away have shown adaptability and resolve in forging alternatives and society benefits from learning what those alternatives reveal about unmet needs and misaligned incentives. By addressing those insights with clarity and pragmatism, the possibility emerges for a renewed equilibrium where provision, protection, and purpose coexist with independence and fairness for all involved. The coming years will unfold according to how effectively that learning translates into action that respects human complexity while pursuing shared prosperity. Corporate practices in technology and service giants have accelerated the displacement dynamic by prioritizing temporary visa programs that bring in large numbers of workers from overseas for roles that domestic candidates could fill when compensation and conditions align, yet the preference for lower cost or more compliant labor creates resentment and reduces motivation among Native men who see opportunities vanish despite qualifications. Major firms in software development, data centers, and logistics have laid off thousands of experienced American employees only to replace them with holders of specialized work visas justified under claims of skill shortages that independent audits often question. This pattern repeats across regions where plants close and facilities repurpose for automated operations that require far fewer staff, leading to sudden losses of thousands of positions in communities built around single large employers. Young men entering the job market observe these cycles and calculate that investing years in training or loyalty yields uncertain returns when external hiring floods the market at different wage expectations. The result is a cooling of ambition where the drive to pursue advanced credentials or relocate for uncertain prospects diminishes in favor of localized, flexible arrangements that preserve personal control even if they limit upward mobility. Deindustrialization in specific locales illustrates the human scale of these shifts as entire towns lose their economic anchors when major facilities shutter and transition to operations that employ fractions of the previous workforce. In regions once defined by automotive assembly or heavy production, the closure of long-standing plants leaves behind skilled workers who face retraining hurdles in markets that favor different profiles or require relocation to high-cost areas. Families that relied on steady union scale wages watch as replacement industries emphasize automation or specialized technical roles that bypass traditional pathways, leaving gaps in middle skill employment that once supported home ownership and community stability. Young adults in these environments absorb the lesson that consistent effort in familiar trades no longer guarantees the lifestyle previous generations achieved, prompting reevaluations of whether full time immersion in formal structures makes sense when alternatives allow basic needs to be met with less exposure to volatility. The broader economy registers these localized contractions through reduced regional spending on housing, vehicles, and services that once circulated wealth within those communities, creating slower growth pockets that contrast with booming sectors elsewhere. Generational differences reveal how younger cohorts approach work and education with altered expectations shaped by observing prior waves of economic disruption and cultural emphasis on credentials over practical experience. Men born in recent decades enter adulthood amid higher college enrollment among women and widening gaps in completion rates that influence hiring filters and earning trajectories, even in fields where on the job performance matters more than formal degrees. Many forego extended schooling when the debt burden and opportunity costs outweigh perceived advantages, especially as entry level positions in service or gig roles offer immediate, though limited income without the multi year investment. This shift contributes to lower full time attachment rates among those under 30, where the percentage neither working full time nor enrolled has climbed steadily, reflecting a pragmatic assessment that traditional milestones like home ownership or family starting require economic foundations that feel increasingly out of reach without exceptional circumstances. The pattern fosters environments where leisure and skill based personal projects compete more effectively, with structured employment offering immediate engagement without the hierarchical demands or uncertain promotions that characterized earlier career ladders. Survival strategies among those outside formal employment often blend family support, informal cash activities, and selective use of available resources in ways that sustain daily life while avoiding the full demands of traditional jobs. Many rely on shared housing with relatives, reducing individual expenses and allowing contributions through non monetary help or occasional supplemental earnings from tasks paid under the table. Others engage in localized services such as repairs delivery or resale that generate variable income without triggering extensive reporting requirements or benefit disqualifications. These approaches enable a baseline existence that prioritizes flexibility and reduce stress over accumulation, though they come with trade offs in long term security and social perception. The scale of such activity contributes to estimates of substantial unreported economic flows that fill gaps left by formal markets, yet also raise questions about overall productivity and public revenue when portions of the population operate partially outside taxed and measured systems. Individuals navigating these paths frequently cite the ability to control their time and avoid unrewarding customer interactions or micromanagement as key advantages that outweigh the absence of employer provided benefits or advancement tracks. Interactions with disability and assistance programs add complexity as application volumes have grown for conditions that range from physical limitations to mental health challenges, creating safety valves that some men utilize when formal work feels unsustainable or inaccessible. Approval processes require documentation and ongoing reviews that deter casual use. Yet successful cases provide income streams that supplement other resources, allowing reduced pressure to accept mismatched positions. Critics note that expansions in certain categories coincide with broader participation declines, raising debates about whether definitions have broadened to accommodate lifestyle factors or whether genuine barriers have increased amid economic and health trends, like lingering effects from widespread substance issues. The programs serve as buffers that prevent sharper hardship for subsets of the population, while simultaneously reducing the urgency for reentry into competitive labor segments. Policymakers face difficult balances when tightening criteria risks affecting those with legitimate needs, while maintaining or expanding access sustains the disincentive effects that contribute to sustained inactivity among able bodied prime age individuals. Family formation suffers measurable setbacks when economic uncertainty and reduced male earning capacity intersect with persistent preferences for partners who can contribute at comparable levels, creating mismatches that delay or prevent marriages and childbearing. Women who achieve higher educational and early career milestones often maintain expectations shaped by traditional provider norms, even as their own independence grows, leading to selectivity that leaves many men outside the pool of considered options. The resulting lower pairing rates correlate with declining birth numbers that project smaller future cohorts and strain systems designed around stable population replacement. Children raised in households with less consistent male presence or financial stability show statistical patterns of challenges in educational attainment, emotional regulation, and eventual workforce readiness, perpetuating cycles that affect community vitality over generations. The absence of dual parent structures in higher proportions removes modeling of shared responsibilities and collaborative problem solving that once transmitted practical life skills and resilience. These demographic shifts compound fiscal pressures as fewer future workers support expanding retiree populations and entitlement commitments, amplifying the long term consequences of current participation gaps. Local communities experience tangible erosion when fewer men engage in steady employment, leading to diminished participation in volunteer roles, coaching youth sports, or maintaining neighborhood institutions that rely on consistent adult involvement. Civic organizations report declines in membership and leadership from prime age males as time once allocated to group activities shifts towards more solitary pursuits or family focused support within smaller circles. Schools in affected areas notice changes in male student engagement and behavioral patterns when fewer working fathers or mentors provide visible examples of routine contribution and delayed gratification. Retail districts and service businesses in regions with higher inactivity rates register softer demand for non essential goods and group experiences, further slowing local economic circulation. The social fabric weakens subtly through reduced trust and interaction networks that once facilitated information sharing job leads and mutual assistance, creating environments where isolation increases even as digital connections proliferate. These community level effects accumulate into broader societal strains, where the loss of shared purpose and collective effort diminishes overall cohesion and adaptability to external challenges. Psychological well being links closely to participation status, as men outside structured work frequently report lower life satisfaction, higher feelings of stagnation, and elevated risks for mood related difficulties stemming from the absence of daily purpose, social feedback, and tangible progress markers that employment often supplies. Studies tracking self reported happiness and mental health indicators show correlations with prolonged inactivity, where the lack of external demands combines with internal narratives of underachievement to create feedback loops that reinforce withdrawal. Leisure activities provide temporary relief through engagement and accomplishment, yet they rarely replicate the social validation or skill mastery that comes from contributing in professional or communal settings. Substance use and other coping mechanisms sometimes fill voids, though they introduce additional health and legal complications that further complicate reentry. The human cost extends beyond individuals to families who bear emotional and practical burdens when providers or partners disengage, creating ripple effects of stress and adjustment that affect household dynamics and child development. Addressing these dimensions requires more than economic fixes, as restoring a sense of agency and value demands cultural and institutional signals that affirm the worth of effort and contribution across diverse paths. International experiences with large scale population movements highlight parallel challenges when imported labor fills economic roles without corresponding social integration, particularly in partner selection and family formation. In several European nations, influxes of working age men from different cultural backgrounds have addressed short term production needs, yet resulted in limited cross group pairing as local women show low openness to relationships despite media and policy encouragement. Surveys indicate high willingness among newcomer men to form unions with Native women, contrasted with preferences that favor cultural compatibility and established provider traits, leading to persistent singlehood among both groups and slower assimilation. The outcome includes heightened social tensions, concentrated male populations in certain areas, and strains on public resources when integration expectations fall short. These cases underscore how economic utility alone does not guarantee the relational and demographic stability that sustained societies historically relied upon when native workforce patterns shift. Lessons from these contexts inform domestic debates about balancing labor needs with social cohesion. though political and cultural differences complicate direct applications. Forward looking projections indicate that sustained lower participation will constrain potential output growth as the pool of available prime age contributors shrinks relative to expanding obligations in areas like healthcare, retirement support, and infrastructure renewal. Economic models that incorporate demographic trends forecast slower gross domestic product expansion unless offsets from productivity gains or external inflows compensate, though historical patterns suggest limits to how effectively technology or migration can substitute for broad based domestic engagement. Debt servicing costs rise as revenue bases narrow, while spending pressures from aging populations and assistance programs intensify, creating tighter fiscal space for investments that could otherwise boost long term capacity. Birth rate declines, project smaller entering cohorts, exacerbating the ratio of workers to dependents and raising questions about the sustainability of current entitlement frameworks without adjustments in retirement age benefit levels or contribution requirements. Communities and families face heightened vulnerability to economic downturns when fewer households maintain dual or stable income streams, reducing buffers against job loss or health events. The trajectory calls for multifaceted responses that align incentives for participation without overlooking the genuine barriers and preference shifts that have emerged over decades. Technological disruptions in artificial intelligence and automation promise efficiency gains that could mitigate some labor shortages, yet they also risk accelerating displacement in remaining middle skill roles, further influencing calculations about the value of formal attachment. Sectors adopting these tools may require fewer total workers while demanding higher combinations of technical oversight and creative problem solving that favor certain profiles over others. Men with aptitudes in systems thinking or hands on troubleshooting could find niches in maintenance design or oversight functions if training pathways adapt quickly enough to bridge gaps. However, the transition period creates uncertainty where displaced individuals weigh reskilling against the appeal of existing adaptive strategies that already provide equilibrium. Policy experiments with retraining subsidies or public private skill partnerships have shown mixed results depending on alignment with actual market demands and participant motivation levels. The net effect on participation will depend on whether new opportunities feel accessible and rewarding, or whether they reinforce perceptions of constant disruption that favor caution and self reliance. Housing and cost of living pressures in high demand areas add further layers to decision making, as elevated rents and purchase prices make independent or family supporting arrangements more challenging for those with variable or moderate incomes. Men pursuing flexible paths often opt for shared or lower cost living situations that stretch resources but limit the appeal of higher earning roles whose after tax and expense net gains feel insufficient to justify the trade offs in time and autonomy. This dynamic interacts with family formation by raising the threshold income needed for stable partnerships or child rearing, contributing to delayed milestones and smaller household sizes. Regions with more affordable housing stock sometimes retain higher attachment rates, though job availability in those locales may not match skill distributions or preferences, leading to migration patterns that concentrate activity in certain metros while others lag. Policy approaches like zoning reforms or incentive programs for workforce housing aim to ease these constraints. Yet implementation faces local resistance and lengthy timelines that delay relief for current cohorts navigating immediate choices. The role of media and cultural signaling influences perceptions of work and success by amplifying certain narratives around independence, flexibility, and work life boundaries while sometimes downplaying the cumulative benefits of consistent contribution to personal and societal stability. Younger men exposed to content that celebrates minimalism side hustles or critique of traditional structures internalize frameworks that make full time immersion seem less essential or even counterproductive when balanced against personal peace and selective engagement. Positive portrayals of trades, entrepreneurship, or steady provision offer counterexamples, yet they compete for attention in environments saturated with immediate gratification options. Shifting these signals toward balanced recognition of diverse contribution paths could gradually encourage broader involvement by affirming the dignity of effort without dismissing legitimate concerns about balance and fairness. Educational institutions and community programs that incorporate practical exposure to varied careers from early stages help shape aspirations that align more closely with realistic opportunities, reducing mismatches that fuel disengagement. Energy and infrastructure sectors highlight the strategic implications of participation trends as projects in power generation, transportation, and resource development require reliable, skilled labor pools that have traditionally drawn heavily from male cohorts in trades and technical fields. Delays or cost increases in these areas arise when workforce shortages force reliance on overtime, imported talent, or accelerated automation, each carrying trade offs in quality timelines and local economic benefits. Initiatives to expand apprenticeship models, mentorship networks, and competency based certifications seek to rebuild pipelines that connect interested men with meaningful roles, offering tangible impact and compensation that reflects demands and risks. Success depends on coordination that overcomes regulatory hurdles, ensures safety standards, and demonstrates clear returns that compete with alternative paths. When men see visible contributions to essential systems that support daily life and national capacity, the intrinsic motivation for involvement can strengthen countering narratives that frame such work as outdated or unrewarding. The creative application of skills in emerging niches, such as specialized fabrication, digital tool development, or localized problem solving, demonstrates how men outside conventional structures sometimes channel abilities into ventures that generate value on their terms. Maker communities, open collaboration platforms, and freelance networks provide outlets for innovation without requiring full corporate integration, allowing experimentation and iteration at lower risk levels. These activities contribute to overall economic diversity, even if they register less prominently in traditional metrics, yet scaling them into sustainable income sources demands business acumen and market awareness that not all possess equally. Supporting environments that nurture these efforts through accessible resources and reduced administrative burdens could unlock additional capacity while respecting the autonomy that appeals to those wary of hierarchical settings. The key lies in frameworks that encourage contribution without forcing conformity to models that have lost resonance for significant portions of the population. Societal adaptation will unfold through the interplay of individual choices, institutional adjustments, and cultural evolution as the consequences of reduced attachment become more pronounced in slower growth, higher dependency ratios, and shifting relational landscapes. Nations that maintain or restore higher participation through pragmatic reforms that address incentives, barriers, and purpose tend to sustain advantages in innovation, resilience, and living standards. The process involves acknowledging past policy and cultural misalignments without assigning blanket fault, instead, focusing on forward mechanisms that realign rewards with effort across genders and backgrounds. Men who have adapted to current conditions exhibit resourcefulness that can inform solutions when channeled toward constructive ends. Women navigating changed expectations bring insights into balancing independence with interdependence that enrich collective understanding. The shared task is crafting arrangements that deliver security, fulfillment, and progress by respecting human motivations while meeting the practical requirements of a complex modern economy. As these dynamics continue, the importance of clear eyed assessment grows because denial or simplistic explanations delay the adjustments needed to stabilize trajectories and mitigate hardships. Data on participation, education earnings, and demographic trends provide the foundation for targeted interventions that expand opportunities without ignoring preference shifts or incentive responses. Families, communities, and economies all stand to benefit from environments where contribution feels voluntary, rewarding, and aligned with personal capabilities rather than obligatory under mismatched conditions. The coming period offers opportunities to test approaches that combine economic pragmatism, cultural renewal, and institutional responsiveness, creating space for voluntary re engagement or innovative alternatives that sustain prosperity on new terms. Understanding the full scope of how these shifts reshape daily realities and long term outlooks equips individuals and leaders to navigate with foresight rather than react in crisis. This examination reveals interconnected forces that extend from corporate decisions to personal calculations, from sectoral changes to demographic projections, each influencing the others in ways that accumulate into the observed withdrawal pattern. The intensity arises not from sudden events, but from steady pressures that reshape expectations and behaviors over years and decades. Men stepping back have responded rationally to the environment they encountered, demonstrating adaptability that deserves recognition, even as society grapples with the aggregate effects. Restoring balance or evolving toward sustainable new equilibria requires honest engagement with root factors rather than surface level campaigns or punitive measures that risk deepening divides. The path involves creating conditions where participation or contribution aligns with self interest and mutual benefit, fostering environments where both men and women can thrive through complementary roles without coercion or unrealistic ideals. The stakes involve nothing less than the productive capacity, social cohesion, and future prospects of the society as a whole, making deliberate, thoughtful action essential in the periods ahead. Corporate strategies in major technology and logistics operations have intensified the squeeze by routinely cycling through temporary visa holders for specialized positions after reducing domestic headcounts, with firms citing talent gaps while simultaneously releasing experienced staff whose skills align closely with the posted requirements. This practice extends beyond software into warehouse automation and supply chain management, where lower compensation expectations from visa workers allow tighter margins, yet erode the incentive structure for Native men who calculate the instability of loyalty in such environments. The pattern contributes to a perception that corporate priorities favor short term cost controls over long term workforce stability, creating environments where ambition feels misdirected when advancement paths appear capped or redirected toward external talent pools. Young men observing these cycles from entry level positions or through industry reports adjust their risk assessments downward, weighing the effort of skill acquisition against the likelihood of sustained returns in sectors prone to such fluctuations. Deindustrialization manifests concretely in locations where long standing assembly operations cease and facilities convert to high tech installations that demand far smaller crews focused on oversight rather than production. A prominent automotive complex that once employed thousands in vehicle manufacturing transitioned to data processing infrastructure supporting artificial intelligence operations, resulting in a drastic reduction of on-site roles and the loss of supply chain activity that previously sustained surrounding businesses. Workers with decades of specialized experience found limited transferability to the new setup, prompting many to exit the formal sector entirely rather than retrain for roles that offered diminished compensation and security. Similar transformations in other industrial hubs have left legacies of underutilized infrastructure and populations that recalibrate expectations around what constitutes viable employment, leading to broader regional adjustments in consumption patterns and local tax bases. Generational attitudes among men entering adulthood reflect heightened awareness of these structural shifts, with surveys indicating substantial portions of those aged 18 to 29 expressing agreement with statements about personal failure, particularly when not attached to steady work. The sentiment rises notably among those disconnected from full time roles, reaching levels where over half report feeling unsuccessful in life trajectories compared to lower figures among peers with children or consistent employment. This self perception stems from comparing current realities against historical norms, where steady contribution led to predictable milestones like home acquisition or family establishment milestones that now require exceptional circumstances amid credential inflation and cost pressures. The outlook fosters cautious approaches to commitment, where the perceived gap between effort and outcome discourages investment in pathways that once defined adult progression. The underground economy sustains many through cash based exchanges and informal arrangements that operate parallel to measured activity, with estimates placing its contribution at significant portions of overall output, including unreported services and small scale trades that evade standard tracking. Participants often maintain basic households, contributing minimal time to domestic tasks comparable to or less than employed counterparts, despite greater availability of hours, highlighting how free time frequently channels into solitary screen based activities rather than expanded caregiving or community involvement. This dynamic reduces visibility in civic spheres where underrepresentation in volunteer efforts, mentoring, or organizational leadership leaves gaps in transmission of practical knowledge and social norms to younger cohorts. The reliance on such parallel systems, while providing immediate flexibility, also limits scalability and exposes individuals to enforcement variability that reinforces preferences for low profile existence over formal integration. Disability program expansions have grown faster than other assistance categories, allowing qualification pathways that bypass active job search requirements for approved conditions, creating additional buffers that some utilize when standard employment feels mismatched with capabilities or rewards. State variations in approval stringency influence uptake rates, yet the overall trend shows these mechanisms outpacing traditional welfare and growth as they accommodate a wider array of health and functional claims without mandating ongoing labor market engagement. The availability of such supports intersects with survival strategies where they supplement family contributions or informal earnings, enabling equilibrium that prioritizes autonomy over the uncertainties of competitive hiring landscapes. Policymakers encounter trade offs when considering adjustments because tightening risk spillover hardship, while persistence sustains the pool of prime age individuals outside active contribution. Family formation encounters persistent obstacles when preferences for partners demonstrating superior achievement or resources collide with shifting attainment patterns, leading to selectivity that leaves substantial portions of men outside viable matching pools. Hypergamy tendencies persist across educational and income distributions, creating imbalances where women with advancing credentials or earnings seek counterparts who exceed their own metrics at a time when fewer men occupy those upper strata due to participation and credential gaps. European experiences with large refugee inflows from conflict zones illustrate the depth of these preferences as newcomer men expressed high openness to local partnerships. Yet Native women showed markedly lower receptivity despite policy and media efforts promoting integration through diverse unions. The resulting singlehood rates on both sides contribute to delayed or foregone childbearing with downstream effects on population replacement and the sustainability of intergenerational support systems. Communities register the absence of consistent male involvement through reduced participation in youth guidance, local governance, and neighborhood upkeep, where fewer adults step into mentoring, coaching, or maintenance roles that once distributed responsibilities across generations. Schools and civic groups note diminished pools of reliable figures for after school programs or event organization, leading to reliance on narrower bases that strain available resources and limit exposure for young people to models of routine contribution. The erosion extends to trust networks where information sharing and mutual aid flow less readily in environments with higher inactivity, creating subtle declines in collective problem solving capacity. These shifts accumulate into broader cohesion challenges where shared spaces feel less animated and opportunities for cross generational transmission of skills and values diminish. Psychological indicators among disconnected men include elevated agreement with failure narratives that correlate with time spent in disengaged states, reinforcing cycles where lack of external structure amplifies internal assessments of stagnation. The rates climb when employment attachment falls away, highlighting how purpose derived from contribution serves as a buffer against such self evaluations. International parallels from refugee contexts reinforce how relational mismatches compound individual disconnection, as cultural and preference barriers limit the formation of stable unions even when economic roles fill temporarily. The data from those settings show one sided openness that fails to translate into actual pairings, leaving both groups navigating higher isolation amid labor market adjustments that do not resolve underlying social dynamics. Forward fiscal trajectories project debt held by the public climbing toward levels exceeding prior wartime peaks, with ratios approaching or surpassing 120% of output within the coming decade, as structural shortfalls persist amid slower labor force expansion and rising entitlement demands. Interest obligations already consume larger budget shares than certain core functions, crowding out room for discretionary investments or buffers against shocks, while primary trust funds face insolvency timelines measured in years rather than decades. The 1 hour gang, you made it all the way to the end. You sat through the hard truths about what is really happening in our society right now, and you stayed with it until the final word. That kind of focus and commitment deserves real respect because most people tap out long before they hear the full picture. If you are enjoying these Angry Guy videos and you want to see more of them, you can show your support right now by buying me a Red Bull using the link in the description of the video. Every single one helps keep the energy up and the content coming without compromise. Tell me in the comments right below what you thought about everything we just laid out. Do you agree that men stepping back from the workforce and from the old expectations is reshaping everything around us? Do you see the same pressures building in your own life or in the lives of people you know? Share your honest thoughts on whether society can course correct or whether the drift we are watching is already too deep to reverse. The conversation matters because these shifts touch every household, every community, and every future plan we try to make. Drop your take below and let us hear where you stand. Like the video if you like it. Do not forget to subscribe. If you like the video, share the video. And just remember that all roads lead to MWA, men walking away, and cheers.
Nothing says you care like crypto. Nothing can compare. Nothing says you care like crypto. Oh, nothing can compare to crypto.